Ryan Dietrich is chief market strategist at the Carson Group and a CNBC contributor. So let's translate this into round numbers. What was your previous S&P target, if we call it that?
Exactly. To start of the year, we set a full year gain between 12 and 15%. Mm-hmm. And now today, on this show, the first time we're releasing our mid-year outlook, and we're saying between 12 and 15%. So we've been overweight equities. We have been bullish. Kelly, I know I came on with you. We said back in late March.
Yep.
We did not lower our target when everybody else was. We stayed there saying we thought we could still gain upwards of 15% this year. Now we upped it a little bit because there's reasons to be bullish, as we can talk about.
How much are we up so far this year? 9?
Right. We were at about 10% at the middle of the year, and I know we're flat-ish in July.
I'm trying to do some math here because I'm a simple person. So if we're at, call it 7,500, up 10%, then if we're going to be up 18, that takes us to 70.
Yeah, up around 8,000.
All the way to 8,000, would it? Okay, so you're basically
that's
we're bullish.
W&L math, Virginia Tech engineering math. Yeah. I would have said 6,000.
That's bearish.
That number is now where a lot of your colleagues, not colleagues, I'm trying to say you're a sell-side analyst or anything, but like where a lot of people are now saying, So there is this earnings through and through, basically? Is that the reason for the change?
I think it's one of the reasons. The other thing that's fascinating about this market, we talked about the June swoon before I came on. The market goes down a little bit when it's normally weak near the end of June, yet everybody gets all bearish just last week. But the reality is we saw like the AAI sentiment poll, bulls down 13% last week, the active manager. So it's like incredible to me, Kelly. Yes, there's lots of positive, but how bared up everybody gets on just a normal weak June swoon, which I love. I love seeing that. There is some new, and we'll talk about it now. So I think we're a little different maybe than some other guests maybe. We think the labor market's really going to come back the second half of this year solely. All of last year, we made 120,000 jobs. We've averaged 110,000 jobs the last 3 months. You look under the surface just today, the initial jobless claims came in better. So we know AI is driving this economy. We get it, and the consumer's kind of wobbly. But the labor market strength in the second half of this year, that's probably going to be a good thing. Consumer confidence is low, yes, but I just saw from the census came out with data this morning, you're having more and more people apply to start businesses. Are people really feeling that bad if they're confident to start a business? I don't think so. So we're optimistic the labor market's going to be a positive second half of this year.
That data point might be the most important one in the whole economy. And it's not really a market-sensitive data point, but that's what all the new hiring comes from new businesses, right?
And one of the charts I sent was how the market has never, and I know never, but never peaked in June.
Never's a big word.
And never's a big word.
Never's a big word. It's like transitory. You shouldn't say it. Not
as big as my ears, but it's still a big word.
Again.
June 2nd was our last high for the S&P. We had some weakness. We get all that. But we don't think it's going to be the first year June was the peak. And I know other guests have said it, but I'll say it one more time. Just 2 days ago, the S&P 500 hit an all-time high on the advanced